Today we are going to discuss about valuation of shares from Corporate Accounting 1, Block 4, Unit 13. This is Dr. Murugesan D, Associate Professor, Wales Institute of Science, Technology and Advanced Studies, Pallavaram, Chennai. Valuation of shares. What do you mean by share? A share may be defined as one of the equal parts into which the capital of a company is divided. That is called as share. You are all very well known regarding shares and the types of shares, the types of share capitals available from the unit of issue of shares. Okay. So, what is the need for valuation of shares? So, need for valuation of shares. So, the following circumstances are need for valuation of shares. So, at the time of amalgamation or absorption or external reconstruction, the company need to value their shares. Then the second category, when loan is granted on the security of shares. If the company getting loan from others, maybe through bank or financial institutions, if in case they hand over the shares as a security, that time they must be valued what is their shares value. Then when preference shares or debentures are converted into equity shares. So in the events of the preference shares and debentures are converted into equity shares as the preference given by the preference shareholders or debenture holders, that time they may be value of their shares. Then when equity shareholders are to be compensated on acquisition of their shares by the government under the scheme of nationalization. If the government take any company under the scheme of nationalization of that particular organizations or the particular company, the equity shareholders will get compensation from the government. So that time they must value what is the value of their shares. So these are all the mentioned circumstances. The company must value their shares. What are all the factors affecting the valuation of shares? So factors affecting valuation of shares. Those the following factors affect for valuation of shares by a company. So nature of business. Then followed by demand and supply of shares. So based on the demand and supply of the shares, they may be major important factor. Then followed by government policies. So each and every the ruling government we change, the policy may be different. So that time the valuation of shares is important. Then past performance of the company. So based on the previous years, it may be past 5 years or 10 years, based on the company's performance it should be valued. Then growth prospectus of the company. So how the company growth from the past years. What is the growth attained by the company? Based on that, they may be value their shares. Then followed by the management of the company. So depending upon the management made some decisions. If it may be effective decision making or efficient management to control the cost and increase their profit. So these are all the another important factor. Then followed by the economic climate. That means based on the economic conditions of a nation and other economic situations like economic crisis or inflation timing. So these are all the major factors for affecting valuation of shares. Then followed by accumulated reserves. So for over a period of time, the company may be allocate some reserves that is called as accumulated reserves. The accumulated reserves to be effect for valuation of shares. Then prospectus of bonus or rights issue. So if in case the company decide to issue bonus shares or rights issue to their existing shareholders or to their investors, that's also most important factor for valuation of shares and dividend declaration, etc. At the time of annual general meeting, the company may declare dividend. So based on that, the valuation of the shares may be different. So these are all the major important factors for affecting valuation of shares. Then we will discuss about methods of valuation of shares. So we have three important methods for valuation of shares. The first one is net assets method, second one is yield method, and the third one is fair value method. So the first two is the important method, that means net assets method and fair value yield method. It should be comprises of the net assets method and the yield method, that is called as fair value method. So methods of valuation of shares. So net assets method, its another name is intrinsic value method. Then second method is yield method or earning capacity method. Then the third method is fair value method. What is net assets method? So measures that value of net assets of the company against each share. That is called as net assets method. So they should measure the value of net assets against for each and every shares of that particular company. That is called as net assets. So that method is called as net assets method. So how to calculate the value per share under this method? So we have some procedures. What are all the procedures to be followed for calculation of value per share under net assets method? So statement of net assets available to equity shareholders. So we need to calculate our preparation of the statement of net assets available to equity shareholders. So we should open for three columns. First column is particulars, then second and third column is rupees columns. So we should make some adjustments from the assets and liabilities. So assets at market value. So what are all the assets to be taken for calculation of assets at market value? Except the preliminary expenses, discount or commission on issue of shares and debentures, and the debit balance of profit and loss account, even formation expenses, underwriters commission, these things we didn't taken up. But the listed assets to be taken for assets at market value. So goodwill, land and building, plant and machinery, furniture and fittings, other fixed assets like leasehold, freehold premises, leasehold premises, like okay. Then followed by some current assets like stock, bills, receivables, cash and bank balance, other current assets like prepaid expenses, um, accrued incomes, like okay. So we should adding these items or what are all the items available in that problem or question. We should take assets at market value. Then we post it in the outer column and adding up. Then we will get total assets at market value. From the total assets at market value, we should deduct outsiders liability. So the following liabilities comes under the category of outsiders liability. The listed outsiders liability should be deducted from assets at market value. Then we will get net assets. Okay. So what are all the outsiders liability available? Debentures, sundry creditors, bills payable, bank overdraft, provision for taxation, outstanding liabilities, other current liabilities, then long-term loans as well as short-term loans. So we should adding the outsiders liability, posted the values in the inner column, then adding up, and it should be deducted from the assets at market, total assets at market value. Then we will get net assets. After getting the net assets, we should deduct some items like preference share capital as well as preference share dividend. So deduct preference share capital and preference share dividend from net assets. We will get net assets or net amount available to equity shareholders. From that net assets or net amount available to equity shareholders, we should calculate the value of equity share. So what is the formula for calculation of value per share? So net assets available to equity shareholders divided by number of equity shares. Then one more formula, of value per share equal net value of assets minus outsiders liability minus preference share capital minus preference dividend divided by number of equity shares. So depending upon the problems. If in case for section A or section B problems means we should use it the second formula. If in case the question comes in the part C, that means a big question means we should first prepare the statement and then we should work out or calculate value per share to use the first formula, right? If in case they have given directly net value of assets and outsiders liability, preference share capital, preference dividend, then the number of equity shares. If in case these type of information is available in that question, if it may be they ask for 2 marks or 3 marks question means we should use it directly this second formula, right? Then the second method is yield method. So yield method is effective rate of return on the investment made in the shares by the investor. It always expressed in terms of percentage. So valuation of shares is made as basis of yield. That means rate of return. How much they will get the return in the form of investment made in shares. That is called as yield method. The first one is based on how much the assets available to equity shareholders. Here, how much the return to be earned with the help of the investment made in shares. That is the difference between these two methods. Okay, right. So, how to calculate value per equity share under this method? So, value per equity share equal to expected rate of return divided by normal rate of return. That means ERR divided by NRR into paid up value per equity share. This is the formula for calculation of value per equity share under yield method. So how to calculate expected rate of return? We already know now what is normal rate of return. Generally, the similar type of business earned in the market that is called as normal rate of return. But we doesn't know what is expected rate of return, how it should be calculated, right? So how to calculate or what is the formula for calculation of expected rate of return? So ERR equal profit available to equity shareholders divided by paid up equity share capital into 100. That means we will get the answer in the form of ERR is certain percentage. This method is considered better than the net assets method because it should given better results when compared to the net assets method because it should be given the return how much earned the investment made in the shares. Okay, so it should be considered as better method or best method when compared to the previous one. Right? So the third method is fair value method. Most of the accountants prefer the fair value of shares, which is average of net assets value and the yield value. It provides a better indicator about a value of share. So this method is comprises of the first two methods, net assets method as well as yield value method. So it should be comprises or average of net assets value and yield value. So how to calculate value per share under fair value method? So value per equity share equal net assets value per share or intrinsic value per share plus yield value per share whole divided by 2. This is the formula. It's a simple method also. Without net assets value and yield value, we can't be able to calculate fair value. Okay, right. These are all the major three important methods available for calculation of value of shares. We will discuss one by one or how to solve it in the forthcoming problems. Problem number 1. The following summarized balance sheet of a company as at 31st December 1987. So they have given the company's liabilities and assets. So share capital 10,000 5% preference shares of rupees 100 each fully paid 10 lakhs. 2 lakhs equity shares of rupees 10 each fully paid 20 lakhs. General reserve 15 lakhs. Profit and loss account of the company 12 lakhs. 6% debentures 8 lakhs. Sundry creditors 2 lakhs 75,000. Outstanding expenses 1 lakh 25,000. On the other hand side, asset side, fixed assets 38 lakhs. Investments 10 lakh 25,000. Stock in trade 5,72,000. Sundry debtors 12,78,000. Then cash in bank 2,25,000. So both side the company's total is 69 lakhs. With the help of the following informations, we will calculate value of each equity share. So what is they have given? For the purpose of valuation of shares, fixed assets are to be appreciated by 10%. That means the fixed assets to be increased by 10%, and investment are to be revalued at rupees 10 lakh 80,000. So in the balance sheet they are given 10 lakh 25,000. So the investment value also increased. Debtors will realize rupees 12 lakh 14,100. So in that balance sheet, the debtors value is 12 lakh 78,000. That means the debtors value to be reduced. Then interest on debentures is accrued due for 9 months and preference dividends for 1987. So these two amounts comes under the category of due. Is also due. Neither of these has been provided for the balance in the balance sheet. Calculate value of each equity share. So that is the question. So in this question they are given sorry. So in that question they have given some adjustments related to fixed assets, then investment and debtors, as well as interest due on debentures and preference dividends due. So in this question, they have given some additional information. For the purpose of valuation of shares, fixed assets are to be appreciated by 10%. That means the fixed assets as per the balance sheet 38 lakhs, they may be appreciated by 10%. That means the fixed assets value to be increased. The investment are to be revalued at rupees 10 lakh 80,000. As per the balance sheet, the investment value is 10 lakh 25,000. Here, the investments are also increased. Debtors will realize at rupees 12 lakh 14,100. So we compared with balance sheet 12 lakh 78,000. That means the debtors value to be reduced. Interest on debenture is accrued due for 9 months and preference dividend for 1987 is also due. So we make some adjustments after making the fixed assets and the debtors and investments values. Neither of these has been provided for in the balance sheet. So calculate the value of each equity share. So they doesn't mention under which method to be calculated the value of shares, but they have given assets value, investments value, debtors value. So with the help of these information, we should calculate the value of equity shares under net assets method, right? So we should calculate how to we should discuss about how to calculate the value per equity share. So calculation of value per equity share under net assets method. What is the formula for calculation of value per equity share under net assets method? So value per share equal to net assets available to equity shareholders divided by number of equity shares. So number of equity shares already available in that problem, but the net assets we should calculate, then only we should calculate value per share. So leave it some space, then we should calculate that means prepare the statement net assets available to equity shareholders. So calculation of net assets available to equity shareholders or statement of net assets available to equity shareholders. Then open as usual the format columns, particulars 2 rupees columns. So assets at market value. So if they have given in the balance sheet fixed assets 38 lakhs, but the fixed assets appreciation by 10%. That means increased by 10%. So 38 lakh into 10%, we will get 3 lakh 80,000. So adding the appreciation value with fixed assets. So the fixed assets market value is 41 lakh 80,000. Then investment they are given directly uh, taken up or revalued at rupees 10 lakh 80,000. Then debtors also they are given what is the value realized market value. 12,14,100. Then stock in trade, cash at bank, nothing mentioned in the adjustment. So we should take in the book value as market value. So stock in trade 5,72,000. Then cash at bank 2,25,000. So then adding the above mentioned assets, then we will get total assets at market value 72,71,100. From the 72,71,100, we should deduct outsiders liability. So as per the balance sheets, outsiders liability 6% debentures. So add interest due. So the interest rate given in that question 6% debenture. So 6% debenture as considered as rate of interest. Then the due duration is 9 months. Okay. So 8 lakhs into 6 by 100 into 9 by 12. We will get 36,000. It should be added with the debenture value. We will get 8 lakh 36,000. So we have some another adjustment. That's why it should be posted in the inner column. Then the sundry creditors. Nothing mentioned regarding sundry creditors and outstanding expenses in the adjustment. So we should take in the book value as outsiders liability for sundry creditors 2,75,000 and outstanding expenses 1,25,000. After adding the debentures value, sundry creditors and outstanding expenses, we will get 12,36,000, which should be deducted from total assets at market value. We will get 60,35,100 as net assets. From net assets, we should make the preference share capital and the preference dividend. So less preference share capital 10 lakhs, then preference share dividend 10 lakhs into 5%. The whole year are due in the year 1987. So 10 lakhs into 5%, 50,000. So preference share capital 10 lakhs plus preference dividend 50,000. We should add these two figures. Then we will get 10 lakh 50,000. The 10 lakh 50,000 should be deducted from the net assets. So 6 lakh 35,100 minus 10 lakh 50,000. After making that particular adjustment, we will get 49 lakh 85,100. That particular amount is called as net assets or net amount available to equity shareholders. With the help of the net assets available to equity shareholders, we easily calculate value per share. So in the previous slide, so net assets available to equity shareholders divided by number of equity shares. So net assets available to equity shareholders 49 lakh 85,100. Number of equity shares 2 lakhs. So 49 lakh 85,100 divided by 2 lakhs, rupees 24.93 per share. It is value per equity share under net assets method. Right? We will move to next problem. Problem number 2. X Limited has 10,000 equity shares of rupees 100 each, rupees 8 paid, and 1 lakh 6% preference shares of rupees 10 each fully paid. The company has a practice of transferring 20% of the profit to general reserve every year. If the expected profit based on past year's performance before tax is rupees 2 lakhs and the rate of tax is 50%, you are required to calculate the value of equity shares. It may be assumed that normal rate of dividend is 20%. So in the previous question or previous problem, they have given balance sheet and some assets value as well as increased value, decreased value in the adjustments. But in that question, they are given only for number of shares and the value per share, as well as how much profit transferred to general reserve, then how much the expected profit, and what is the rate of tax rate, then what is normal rate of return. So with the help of these informations, we should assume that or taken as calculation of value per equity share under yield method, because they have given some profit as well as normal rate of return. With the help of these informations, we should calculate value per equity share under yield method. So calculation of value per equity share under yield method. What is the formula for calculation of value per share under this method? expected rate of return divided by normal rate of return into paid up value per equity share. So we know normal rate of return and paid up value per equity share, but we doesn't know expected rate of return. So leave it some space. Then calculation of expected rate of return. What is the formula for calculation of expected rate of return? ERR equal profit available to equity shareholders divided by paid up equity share capital into 100. So we know the paid up equity share capital, but we doesn't know profit available to equity shareholders. So next workings is calculation of profit available to equity shareholders. So we should prepare some statement. So they have given expected profit before tax 2 lakh rupees. Then it should the company generally transfer to general reserve 20% from their profit each and every year. So less it should be deducted from the profit. So less transfer to general reserve 2 lakh into 20%. So that amount is called as 40,000. It should be deducted from profit before tax. Then we will get 1,60,000. Then the company have 50% tax bracket. So profit before tax is 1,60,000 after making the adjustment of general reserve. We should 50% tax should be deducted from that particular amount. So 1,60,000 into 50 by 100 we will get 80,000. After deducting the tax amount from profit before tax, we will get 80,000. So after that we should deduct preference dividend. So the preference share capital is 10 lakhs. The rate of dividend is 6%. So 10 lakhs into 6%, we will get 60,000. After adjusting the preference dividend from profit after tax, we will get profit available to equity shareholders is 20,000. I will explain once again. Profit before tax 2 lakhs. Deduct transfer to general reserve amount from the profit before tax. So transfer to general reserve is 40,000. It should be deducted from rupees 2 lakhs. We will get 1,60,000. From 1,60,000, we will deduct tax 50%. So 80,000. After deducting the tax, we will get 80,000. From 80,000, we should deduct from preference dividend. The preference dividend is 1 lakh into 60, 10 lakhs into 60%. So 60,000. After deducting the preference dividend, we will get 20,000. That amount only available for equity shareholders. That is called as profit available to equity shareholders. So we should come to calculation of ERR. Profit available to equity shareholders divided by paid up equity share capital into 100. So profit available to equity shareholders is 20,000 divided by paid up value equity share capital value is 80,000. That means the total number of shares is 10,000. Paid up value per share is 8. So 10,000 into 8, 80,000 into 100. We will get 25% as ERR. With the help of ERR as well as NRR and paid up value per equity share, we should calculate value per share under yield method. So expected rate of return 25%, normal rate of return 20%, paid up value per equity share is 8. So 25 divided by 100 divided by 20 divided by 100 into 8. That means 0.25 divided by 0.20 into 8. We will get rupees 10 per share. So value per share is rupees 10 under yield value method. Right? Problem number 3. So on 31st December 1995, the balance sheet of a limited company disclosed the following positions. So they have given liabilities as well as assets. So issued capital in rupees 10 shares, 4 lakhs, reserves 90,000, profit and loss account 20,000, 5% debentures 1 lakh, current liabilities 1,30,000. On the other hand side, fixed assets 5 lakhs, current assets 2 lakhs, goodwill 40,000. So on the whole, both side total is 7,40,000. On 31st December 1995, the fixed assets were independently valued at rupees 3,50,000 and the goodwill at rupees 50,000. The net profit for the past 3 years were 1993 51,600, 1994 52,000, 1995 51,650, of which 20% was placed to reserve, this proportion being considered reasonable in the industry in which the value of the company is engaged and where a fair investment return may be taken at 10%. Compute the value of the company share by the net assets method and the yield method. So they are asking with the combined combination of net assets method as well as yield method, right? So they have given assets and assets value as well as profit for the past 3 years, as well as they are given some adjustments. That means normal rate of return. That means the industry in which the value of the company is engaged and the fair investment return may be taken at 10%. The 10% is taken as normal rate of return, right? So how to calculate value per share under net assets method as well as yield method, we will discuss one by one. So calculation of value per equity share under net assets method. The formula is net assets available to equity shareholders over number of equity shares. First we should calculate net assets available to equity shareholders. So how to calculate net assets available to equity shareholders? Assets at market value less outsiders liability. So what are all the assets given in that problem? Fixed assets valued at rupees 3,50,000. Current assets nothing given, so it should be taken as book value as market value. Goodwill also taken as book value as market value. So adding these three items, we will get 6 lakhs. That is taken as total assets at market value. From that, we should deduct outsiders liability. 5% debentures 1 lakh. Current liabilities 1,30,000. So we add these two items, we will get 2,30,000. It should be deducted from total assets at market value. We will get 3,70,000 as net assets available to equity shareholders. With the help of net assets available to equity shareholders, we should find out value per share. So 3,70,000 divided by number of equity shares is 40,000. It should be available in that problem. So with the help of net assets available to equity shareholders and the number of equity shares, we should find out value per share. So 3,70,000 divided by 40,000 rupees 9.25 per share. That is value under net assets method. Next, we should calculate value per equity share under yield method. What is the value? Should be we will calculate. So calculation of value per equity share under yield method. What is the formula? Value per equity share or value per share equal to expected rate of return divided by normal rate of return into paid up value per equity share. So we doesn't know the expected rate of return, but we know normal rate of return 10% given in that formula. So we need to calculate expected rate of return. So how to calculate expected rate of return? ERR equal profit available to equity shareholders divided by paid up equity share capital into 100. So we know paid up equity share capital, but we doesn't know profit available to equity shareholders. So how to calculate profit available to equity shareholders? We will work out in the next step. So calculation of profit available to equity shareholders. We should open for 2 columns or 3 columns, particulars rupees. So based on the information available, we should make the columns. Here there is no much more adjustment, so we need to open 2 columns, particulars, a single rupees column. So net profit available for 1993 51,600, 1994 52,000, 1995 51,650. After adding these 3 years profit, we will get 1,55,250 as total profit. With the help of total profit, we should calculate average profit. 1,55,250 divided by 3, we will get 51,750. Less transfer to reserve. Generally, the company transfer 20% of profit, but they are given 20% in each and every year. That means we should take as average profit. So from average profit, we should calculate 20%. That amount is 10,350. It should be deducted from the average profit. Then the remaining profit is considered for profit available to equity shareholders, because there is no preference share capital or preference dividend available in that problem. So the 41,400 is taken as profit available to equity shareholders. With the help of profit available to equity shareholders, we should calculate ERR. So 41,400 divided by 4 lakhs, that is called as paid up equity share capital into 100. So we will get 10.35 percentage. With the help of ERR and NRR, we will calculate value per share. So ERR 10.35 percentage taken as 0.1035 divided by NRR 10 percentage 0.10 into paid up value per equity share is 10. So we should get the value per share is rupees 10.35 paise per share. Do you understand? Right. Then the third method, they didn't ask, but we should easily calculate the value per equity share under fair value method, because it's a combination of net assets value and yield value per share. So value per share under fair value method is net assets value per share plus yield value per share. So in this problem, so net assets value per share is 9.25, yield value per share is 10.35 whole divided by 2. So we should adding the net assets value per share and yield value per share is 19.60 divided by 2. We will get rupees 9.80 per share. So the next question is problem number 4. The following informations find out the value of each share. So they have given assets and liabilities value. So they are given share capital 20,000 equity shares of rupees 10 each, 2 lakhs, reserves 2 lakh 50,000, profit and loss account 30,000, unsecured loan 80,000, current liabilities 20,000. On the other hand side, fixed assets goodwill 1 lakh 90,000, investment 3 lakhs, current assets 50,000, loans and advances 30,000, miscellaneous expenditure 10,000, on the whole 5 lakh 80,000. For the purpose of valuation of shares, goodwill shall be taken at 2 years purchase of average profit at last 5 years, or rupees 60,000, rupees 70,000, rupees 40,000 and rupees 50,000, again and rupees 50,000. So in the previous question they have nothing given regarding to valuation of goodwill, but this time they have given calculate the value of goodwill and then calculate value of each share. So we should calculate under only net assets method, right? So how to calculate value of shares and the value of goodwill, we will discuss. So calculation of value per equity share under net assets method. What is the formula? Net assets available to equity shareholders divided by number of equity shares. So we doesn't know net assets available to equity shareholders. So first we should calculate net assets available to equity shareholders. So for that purpose they are given in the balance sheet goodwill some amount, but they have given some instruction or information for calculation of value of goodwill under simple average profit method or average profit method. So goodwill equal to average profit into number of years purchase. So we first need to calculate average profit. So it's a workings only. We should post it directly. So average profit equal total profit divided by number of years. So adding the 5 years profit divided by 5. So 60,000 plus 70,000 plus 40,000 plus 50,000 plus 50,000. We should adding these 5 years profit is 2,70,000 divided by 5. We will get the average profit is 54,000. Then 54,000 into number of years purchase is 2. So goodwill value is rupees 1,08,000. But in that question they are given goodwill value is 1,90,000. Now the value of goodwill is 1,08,000. Should take in this value only, right? Then calculation of net assets available to equity shareholders. Assets at market value. Instead of goodwill book value, we should take in the calculated value. That value is considered as market value. So goodwill equal goodwill 1,08,000. Investments nothing given in the adjustment. So we should take in the book value as market value 3 lakhs. Current assets 50,000. Loans and advances 30,000. uh, we should omit the miscellaneous expenditure. Miscellaneous expenditure comes under the category of losses. It may be preliminary expenses or discount, commission on issue of shares and debentures, formation expenses, likewise. Okay, so you should leave it. So 4,88,000 total assets at market value. Less outsiders liability. We have two outsiders liability only. One is unsecured loan, another one is current liability. The unsecured value is 80,000, current liabilities value is 20,000. So total outsiders liability is 1 lakh. Should be deducted from total assets at market value. We will get 3,88,000. That is taken as net assets available to equity shareholders. With the help of net assets available to equity shareholders, we should calculate value per equity share. So net assets available to equity shareholders rupees 3,88,000. Number of equity shares is 20,000. That means the value per share is rupees 19.40 per share. So that is the end of unit 13, valuation of shares.